Hello trading friends and welcome back to Forex Focus, brought to you by tastyfx. We're going deep on the US dollar here in light of the tumble it's taken over the course of the last couple of weeks. A lot of people calling for what has been a seemingly inevitable in the last couple of years of overwhelming US dollar strength, now calling for that inevitable mean reversion or crash for the US dollar. And this could be it. We are teetering right now on prices we've seen in recent history, but have really been the resistance points for stuff like pound, euro, and yen, and support points for the US dollar. So let's dive into these points of support for USD, because this might be a little surprising to you. It was a little surprising for me to see that right now the pound back above 130. Obviously knew that that was a high price for the last year or so of trading, but that is the highest since July of 2023. So now more than a year's worth of trading right now, trading at the lows for dollar, highs for pound. Same thing for euro, now back above 111. And you might say, okay, well, Frank, I remember seeing 130 and I remember seeing 110 for pound and euro respectively. So we have seen these prices. This isn't, 5-year, 20-year extremes for those pairs. But keep in mind that when we saw that 130 in pound, and we'll take a look at the chart and some more historical data in just a second, that market only got up to around 131, 132. It only got up there for a handful of days. Same thing for that euro, only got up to 112, 113, and only got there for a couple of trading days. We're right now on the precipice of, are we going to take another leg lower in dollar and start to look at historical extremes for the last 2-3 years, going back to that post-pandemic US dollar bull run that we went on in 2021 and 2022, or are we going to see another retracement like we have seen over the course of the last several months? It'll be really interesting, but just to highlight the rest of the pairs, because we are going to dive into yen in just a second, we are seeing another trip to the lows for US dollar. Remember that amid all the unwinding talk of a couple of weeks ago, 144, 145 has been the low since January of this year for that dollar yen pair, and we're right back in there. There was the bounce of the last 5 to 10 trading days, but the dollar has given up that bounce and is right back near its lows versus the yen, as the US data just not picking up. We're not necessarily seeing fear in equity markets in the same way that we're seeing bearishness in this US dollar market. But there's definitely some fear in the US side of things compared to these other major currencies. And just to round things out, I know it's not historical extremes, but dollar CAD back below 137, getting really interesting if it can break through 136 or 135. Then we would be getting into some historical extremes. And same thing with that Aussie. We did get up to 68 cents a couple of weeks ago in July. But keep in mind that when they do get up to 68, or if they do get up to 68 cents again here, trading above 67.30 here in recent trade, if they do get up to 68 again, that is highs for the Aussie for the last several months. So not quite at those historical extremes, but not so far off. But let's take a deeper dive into the dollar yen piece so you can see just what this dollar weakness has looked like in what some might say is a really major pair here between the US dollar and the Japanese yen. And you can see the downside starting in mid-July, when this market went from above 160 to at flashes below even 144, although it didn't close there on a daily basis, and now trading around 145 and change. And that fall from the highs from mid-July here to mid-August was a 10% move. Now that might not seem like a lot for those of you who are trading Tesla and Nvidia and everything else. That's a huge move for not only a forex pair, but a major forex pair To move 10% in a year sometimes is a big move. To move 10% in a month of trading, absolutely huge. And like I say, they had the bounce back here for the dollar where the market looked like it might climb back above 150 there for a hot second about a week ago, and now completely reversing course. And the question again becomes, is this that US dollar crash that we've been waiting for the last handful of years? And speaking of the last handful of years, let's look at some historical data on interest rates to see what's behind this, at least for the Japanese yen piece. We're going to look at the pound piece in just a second and some different US data. But on that yen front, you may have heard about the unwind and the carry trade, and of course interest rates at the core of any forex carry trade, which is usually a strategy to use forex markets and leverage within forex markets to get a higher interest rate in one currency at the exposure of a lower interest rate in another currency. So for the last couple of years, you could get 3, 4, 5% from the US and being long the US dollar and finance that with, at a lot of the last handful of years, negative interest rates in Japan by selling the Japanese yen to finance that long dollar trade. Now, of course, there is risk in the price of that exchange rate and the price of that market, but the carry trade taking advantage of this divergence in interest rates. Now the US dollar, which appreciated to great historical degrees earlier this year when it was above 160 against the yen, that was the highest US dollar price since 1986. So that US interest rate story that brought so much dollar demand and dollar upside now might be its undoing as there's greater confidence that the Fed is going to cut interest rates, and there's fear that the Fed might have to cut interest rates by a large degree to fix what might be a potentially recessionary U.S. economy. And at the same time, of course, Japan, ever the hipster contrarians, hiking interest rates. But that's a story for another day. You can take a look at all the content we've done around the unwind and this in particular. But this is part of the reason why you're seeing some dollar downside. U.S. interest rates looking like they're going to be moving lower in the near future off of their 5.5% highs where they've been for the last year plus. I do want to take a look here at the pound and go deeper on this piece, because this is a different story. The UK, they hiked interest rates up to 5%. And so the dollar demand that we've seen over the course of the last couple of years, and at one point, euro getting below parity with the dollar and the pound getting under 110 with the dollar, which is lows for the last decade plus. For pound, highs for US dollar, that has started to turn similar to the dollar versus the yen, but for some differing reasons that we'll get to in just a second. Interesting here, like I say, 130, though the pound has been as high as 132 and change in recent years, this would be right here, some of the highest prices that we've seen since 2022 has not really consistently traded above 130. But if you go back to just 2021 and certain time periods in the 2010s, you're seeing, plenty of 140 prints, and you're seeing even, 150s, 160s, and 170s going back to around 2013, 2014. So plenty of room for this dollar to run to the downside relative to some of these major pairs if the US data continues to go south. And let's take a look at some of this US data here, because it's been an amalgam of things. You can take a look at some of the manufacturing PMIs and some of those data points, but employment has been a big piece here as we just got one of the worst U.S. unemployment prints in the last couple of years, actually the worst print since I believe it was November 2021. And you'll remember that was the time period where the global economy, but especially the U.S. economy, had that huge bull run post-pandemic. We have the pandemic crash, and then coming out of the pandemic, okay, we're finally getting back to normal. And then end of 2021 and into 2022, really hot run for U.S. equities, U.S. production. That's when inflation started to heat up and the U.S. started to hike interest rates, and the dollar really saw that bull run. And now getting back into those, 4 to 5 to 6% potentially, not there yet, but unemployment numbers that we saw prior to the U.S. dollar bull run. So if this data gets even worse, it might not just be the interest rate story and the unwind between dollar yen, but it also might just be if the U.S. saw some of the strongest economic data in that 21, 22, and 23 timeframe, could they be the hardest fall here on the other side of that, as inflation now has come down, GDP numbers have come down to more average, normal rates here in 2024, and the U.S. dollar could see some heavy mean reversion here in coming weeks. And let's take a look at that, going back to the dollar yen, just to show you, because of course, the pound could get back up to 150, 160, 170. It's already at 130. But when you look at the dollar relative to the yen, man, there is potential for a crash here. And I know equity traders are saying, well, Frank, equities and some of these other markets aren't necessarily mean reverting. Well, in currency markets and forex markets, you do tend to see some long-term mean reversion, which is to say, if you're looking at dollar yen prices for the last 30, 40 years, they do tend to oscillate around the same range and not necessarily drift in one direction or the other. Of course, that could change, but if we are going to see some long-term mean reversion, I mean, the dollar right now at 145 against the yen could move drastically lower, could absolutely crash down to 130, 120, or even 110 and below, which is where this market is traded as recently as 2021, just a couple of years ago. So we'll continue to monitor the U.S. data, obviously monitoring the U.S. interest rate scene with coming FOMC meetings. How much will the Fed cut this year? That'll obviously have a lot to do with this dollar yen in particular, but how much will U.S. interest rates move compared to the Bank of England and the European central banks? Also an issue, but all eyes on U.S. data as people are worried about a U.S. recession, and that could cause this long-term mean reversion or this U.S. dollar crash.